Good day, everyone. It's the 8th of May. It's about 10:30 in the morning. Public holiday here in the UK, so no trading today. But I'm looking at VectorVest UK clearly after the close on Thursday, the 7th of May. Situation based on the VectorVest market timing indicators looking very good indeed. The short-term trend is up, and the color yard is showing a green light on the front page of VectorVest. And within the green light, you can see that little black star winking at you. Well, that means that the price is up day over day and week over week, and the momentum is rising, which is a really good signal. So all of these signals up, and the longest term measure of the trend on VectorVest, a confirmed up, has been up since April the 24th, April the 27th, should I say. It turned up. So all the measures of the trend on VectorVest UK looking up. If I pull up the market timing graph, there we are. There's the VectorVest market timing graph, and I can put on that longest term measure of the trend for us, the confirmed call, and that was that confirmed call down that started off this crisis, and then the last confirmed up a few days ago that's still in place. The buy-sell ratio is still looking poorish, but off its lows, the buy-sell ratio at 0.53. I'd certainly be an awful lot happier if that got above 1. But nevertheless, the trends are in place. Situation not looking nearly as good in the the US. Although the US had a good day yesterday, advances twice that of declines. The short-term trend is down, the underlying trend is down, and we've got a confirmed down in place. So the US market looking an awful more negative than the UK, and that is the market timing chart of the US market. I defaulted to the DEW market timing system because that's the system that I'm using for my own bets at the minute. And that gave a signal to buy the market on the 6th of April. In the previous chart a minute ago, the UK market gave a DEW signal to buy the market on the 7th of April. So coming in pretty much around the same days, and this signal is still in place. So the DEW is still saying that it's safe to be in the market. The other market timing signals are saying not. So it's certainly a time to be very careful indeed. And certainly if we saw this market coming down and getting down below these lows of a few days ago, well, that would be quite a serious situation. The US is trading today, and this is the non-farm payroll day. Everybody expects the number to be absolutely awful, as were the ADP numbers on Wednesday, but the market's still hanging in there, so we'll see what happens today. Nevertheless, a breakdown below those levels would be serious, that's for sure, and we could probably get a sell-off that would last a couple of weeks. But the market has been resilient in the face of an awful lot of very, very bad news. This is the SPX, folks, or the S&P 500 index, and it's made 3 drives up. And it stopped at a 62% retracement of that last range, and it sold off, and there's a lot of fibs here for those of you that like the fib sequence. This low, this intraday low a few days ago, was exactly a fib level of the last range, and this little double top that is charted on Thursday and Tuesday, the highs of the day, in fact, defined by another fib level of this last little move. So the bulls are here, the bears are there, and we're caught in this little tight range in between. Very bullish buying somewhere underneath 2800, very aggressive selling by the bears at 2890. We shall see who wins. The market has been very, very resilient, as I say, in the face of a great deal of bad news. So let's see what the non-farm payroll report comes this afternoon. As I say, my positions are based on the DEW market timing system. That's it, and that's still in place. So the question I'm asked now is that, okay, the market's rising, what shares do we buy? Well, I answer that relatively easily by looking at UniSearch, and I have a search that has been working well for me over the last little while. It's called That's the UK. I wonder why I couldn't find it. It's in the US, and it's called SP500 DEW Swingers. It looks at S&P 500 stocks, and it looks at them if they have got a baseline comfort index of 1.2. Now the comfort index in VectorVest measures the long-term trend, it measures the strength of a trend, it measures the volatility of the trend, and it measures the fundamentals. And if the trend is getting stronger and with little volatility and the fundamentals are improving, that should offer you some comfort, and that's why it's called a comfort index. It's a secret weapon on VectorVest. It measures the longer term trend of the particular share. So I'm looking for a comfort index on a scale between 0 and 2 of greater than 1.2 within the S&P 500. So I'm looking for a share that's trending strongly in the S&P 500. And I'm sorting that by this mixture of the comfort index times earnings growth rate. So I'm trying to bring those shares to the top of the pile that are trending strongly, that are also growing earnings. And I ran this yesterday, and that's what it came up with. AMD's been at the top of the list for a very long time, and as you can see, AMD is in fact growing earnings at 33%, and it's got the highest combination of CI and growth rate in the S&P 500. That's a very good place to be. Newmont is there, Charter is there, lots of companies, Adobe is there, Crown Castle is there, Nvidia is there, and if we go down a little bit further we find Microsoft is there as well. So that finds some really good stocks that are trending strongly, that are growing earnings strongly, and I want to buy them when the DEW moves up. And if I refresh your memory on the DEW, there was the DEW, and it in fact gave me a buy signal on the 6th of April. So what I'm going to do without further prompting is that I'm going to go to the 6th of April. There it is. And run the search on the 6th of April. And then by quick test, these are short-term positions for me, so I quick test the top 5. They're all in profit, and the market's up 9.5%. This is slightly beaten the market at 11.35%, and there are no losers in the pack. These shares really moved very strongly higher in the first 2 weeks after the DEW signal, and if you were to run the test for 2 weeks, for example, they really bounded upwards, and now they've stopped a little bit and the market has caught up. But if we look at AMD, we can see, put up the chart, and as you can see, I like my lines, and if we look at it over the last 6 months, and I put on the DEW signals, that was the DEW signal came in just here, and I thought it was quite appropriate that it broke up through that high pretty much on the same day. And as you can see, those of you that like support and resistance, it actually broke and then came back and kissed it and then moved up very strongly. That was a very strong move up, and as you can see, it's now retraced, it's pulled back to that Atlas old top, and I'd be happy. I'm hoping that this is going to move very strongly up and take these highs out. Those people that are chartists are actually pointing out this beautiful cup and handle formation that could be in process, and certainly if I got a couple of closes above this line, I'd be tempted to add to that position. So as you can see, the signals with the DEW on the AMD, that one out for a while, back in here, that was a beauty, and out, and then in a couple of days later, out there, in here, and we'd be still in that position, hoping it's going to break very strongly. Indeed, clearly its future will be defined by the overall market itself. So watching the DEW very carefully, and certainly be watching the non-farm payrolls very carefully this afternoon. So what I've tried to talk about is the technical position of the UK and the US markets. certainly for short-term positions, if you're interested in short-term gains, the DEW tells us when it's safe to be in the market, when it's not safe to be in the market, and that little search will find shares that have got a great combination of trend and growth rate. So I hope that helps. Thanks very much.